My name is Dontez Lindsay. I am the general manager of Ducks Trading LLC, as well as the lead trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. With that out of the way, let's get into the content.
Sweet. Good morning, everybody. So, let me turn on the music real quick. How's everybody doing? You have a good weekend? All right, so sorry to disappoint you, but there's nothing available right now in terms of opportunities in the penny land. I got a little bit excited from PRVB, but as soon as I opened up the chart, it was obviously some type of buyout. And even if it wasn't, the market cap's way too high. And this news, yeah, I didn't even look at it as soon as I saw it was a buyout. Other than that, nothing else is up enough to look like it's going to turn into anything like later. I actually should look at CMND. Just because it's up like 20%. Yeah, but other than that, yeah, I've been up since like 2 o'clock, so about like 4 hours now. Couldn't go to sleep like after I woke back up, so I've just been reading and playing with ChatGPT. Went through a lot of my notes. Pretty cool. I got rid of a lot of my noise, but yeah, I don't see anything on CMND that looks like it's something we would look at. Like it's a microfloat, micro cap. I do like its biotech. It's been downtrending for a while, so it's due for a big spike. And we do know it's up 30% now. The only reason I really looked at it was because since it is downtrending, even before that point, I was expecting some type of pre-market breakout. And, you know, I'd be looking for those 20 to 50% ranges anyway, so I can, you know, jump on that train before it takes off. But for now, I don't see a catalyst that will give me a good idea that if it's ready to actually start a runner, because I'd pretty much be looking for a news runner with the right criteria, and this doesn't fit the criteria. The market cap's kind of too low, but that's not the real problem. The real problem is the float's too low. So yeah, let's see what pops up later. If you want to run down on what happened Friday, not a whole lot. What's up, homie? Oh, you're here early, Ben. Biggest short squeeze you ever seen, about to start on SPY next couple weeks. it's because of the whole bank crisis stuff. Like I've been hearing about it for about like 5-6 days now. I still didn't do like an in-depth study trying to figure everything out. But yeah, I wouldn't be surprised. Like I heard Silver Bank went down, Silicon Valley Bank, and something with the A. At least like 4 banks went down, and the entire financial sector is just getting crushed. Like 6% down on a day. People legit put like hundreds of thousands in like one day, and then the next day, now they have to like sue their bank just to get a fraction of it back. Like there's all kinds of stories going into it. The Fed even started a new program just to protect people from like losing all their money. And then President Biden, he started proposing some things that were very questionable, like doubling the capital gain tax, charging for unrealized like profits, like taxing based off of those. I've heard so many things, but I still haven't found a chance to, articulate it and like fact checked and everything like that. But yeah, it doesn't look good. So I wouldn't be surprised if there is like the ultimate squeeze happening in the next couple weeks. Now we are at 380 right now. And, just last week we were talking about going to like 450 or 420 and 500 and stuff like that. It's a new bull market. Nah, it's over. There's the music. Pilfer. Oh, that the vaccine? Pilfer buyout. Provision. Okay. I got excited too. All right. What was I about to say? Oh yeah, we were talking about the bank crisis. Oh yeah, Friday. Friday, there was only, I think there was actually 2 things that were tradable, but there was one that was obvious. And I think I said it before we left the stream, and that was LUNR. And with LUNR, this one pretty much did a double top. Like LUNR and I think it was OCEA, they each had like a back end to their parabolic / retest of their layers of resistance that they created like 2 months ago. Well, actually, not in this case. It was actually like a few weeks ago. But at the end of the day, they still had layers of resistance that they were re-spiking into. And the lower 20s is what I was expecting for LUNR. Like, because that was the end of the huge parabolic from 80. Like it dipped all the way down to 23, bounced all the way up to 40, came back down to like the 20s, and then eventually faded down into the double, almost single digits. Well, since this one respiked and had 100% move up to like almost 20, we knew that was like a really respected key level. And everyone that is long on this, they understand that there's several layers of resistance up there. They just needed room and extension before it became exhausted again. Well, the first day we saw at least 60% extension. And then the second day we got the 50%. Remember, we always want like 40% when we think about these resistance plays and bounce shorts. So we had that. So it went from like 10 to 19. That was that 90% extension. I thought it was 60. 90% extension here, came back down, And then that gave us room for another like minimum 40. And we used that same high from the previous day, and it gave us a double intraday top. I forgot what I was about to say. When we first initially spiked into there, that's where like all the momentum's going in there. That's the full strength. And then going into the second one, that's where you wanted just a confirmation of if that strength was going to hold or not, especially after it did a 20% pull that showed evidence of weakness. And yeah, during this time I had 300 shares. I wanted to get like 500, 600 shares, but I don't know. Like sometimes TZ be like, they be messing with me. I can't tell if I can only go up to my equity or if they flag my account personally or like what it is. But whenever I feel that I'm about to be messed up by my brokers, like pricing from the borrows, or there's going to be a potential glitch and everything like that, I just don't feel like trading anymore. Like there's been way too many times where something like that would happen, and it wasn't just TZ, but the broker's always going to have some type of glitch. But whenever I get into that, okay, something's not happening like I think it's supposed to be, it breaks my thesis with like the trader or the trade itself. I'm just like, nah, not trading today. I don't feel right. Not anymore. And that's what keeps happening. Like if I can't go in like ×2 leverage, ×4 leverage or whatever, like, and I feel some type of way because of that. Initially, I think, okay, I'm just being greedy. I need to just like size down like to 20% or 40% of my actual equity so I can control my risk. But then I start thinking about it again, and I'm just like, wait a second. I think I just don't feel comfortable soon as something like breaks my thesis at all. So it's real weird. But at the end of the day, I'm gonna blame the broker. So I ended up getting to the top of this and wanting to trade. He went in and like he made money off of it. But during that time, I couldn't borrow more. And so I ended up just selling like right at the top. And the worst case in this for me was risking up to 21. Because I always like risk like $2. And that was the only thing that was actually tradable that day. If you did try to get the back end of OCEA, it was similar, but less odds because, you know, its pre-market high is all the way up here at 11, but you knew that the parabolic, the closing day of that parabolic plus the next day was somewhere around like 1050, and it never got that far. So that would have been like the second place I would have went in. It's like around 1050 on that. Yeah. So like the close of this day is like 1080. Next day high is at 1070. So using 1050. Yeah. So those are the only things Friday. I didn't touch it. I lost $40 on the borrow fee. So I'm mostly mad that I gave back the fees and then I got $4 back. But yeah. And I shouldn't. Yeah, that's a different story. But yeah, nothing going on right now. Hopefully something pops up. I'm not itching to trade, but I'm ready. I'm ready if they do. If you were to short on Friday into 19.50, where would you consider a stop out? Yeah, I already said it, 21. 21 because like no matter what account size I'm at, if I'm doing risk per share, like in terms of cents and dollars, when I'm in the 20s or next to the 20s, I start risking $2 per share. It starts becoming like $1 per share when I get above $10. And it's 50 cents per share when I'm around like $5 to $8. and then 20 cents per share for like 2 to pretty much like 2 to 4. Now I thought about this a couple hours ago. This liquidate option. Last time I got liquidated on a trade that I held all the way through until they liquidated my account, I couldn't trade the rest of that day. But I was really upset because I took a huge loss, but I actually could have recouped at least 3/4 of those losses, because the whole reason I tried to hold through the whole thing was because I was waiting for an offering. As soon as it got liquidated, the offering came in 10 minutes later. So when I tried to resize, they said I got liquidated, and it turned my pretty much hit my daily loss for the day. So I don't know if that's what this does too. So I'm gonna have to ask Reddit or do a test of this at some point. Yeah. I don't know why I just started thinking about that. Let's do something else. Oh yeah. Good morning, guys. Banks are going bankrupt. Credit even coming. Stock market will be back soon. Okay. All right. Well, we have time to talk about games. And one of my favorite games is coming out soon. Diablo 4 comes out March 17th. Probably. Okay. So I think the actual release is like July, but the early beta comes out March. Wow. I just saw it come up before I even said anything. Huh. I thought they already had the beta out. But they're saying the initial release is now. Like, I know I saw someone play it like a few months back though. It's kind of weird. But yeah, but between this, Monster Hunter, and I play a lot of games. Not anymore, but used to. But as soon as I start this, oh my gosh, I'm dropping the Netflix, dropping everything. It's only gonna be Diablo, trading, sleep, and finding more noodle restaurants. Probably until like August. I'm gonna defeat all levels. Easy, normal, and hard. I don't even know if it's gonna be in that order. Because Steven, he's gonna go straight to the hard level. And he's gonna be like, why can't I get out of stage 1? And he's gonna be like, hey, come over here, Dontez. Like, we gotta beat this together. Okay, I gotta stop. Where's the cat? I have way too much energy right now. Like, one of the things I've been doing is my first year in trading, The main theme that I learned from my first year in trading was efficiency and how much I lacked it. And, you know, the market inherently has a lot of inefficiency. The second year, which is now, I feel like speed and security was my lesson of this year. Like, this whole year was just trying to survive. Like, literally trying not to blow up like 95% of the people did inside of the market. And so, you know, you had to learn all the risk management strategies. You got to let all the opportunities come up to where you're just trying to figure out what does a good opportunity look like? How are you going to react? Is that reaction a healthy reaction? What's the potential risk management strategies? What's your sizing techniques and everything like that? You know, just trying to get a rope on, is there any kind of consistency from what's available? And yeah, the first like 3 months of this year, we have had opportunities, but there's so many just whipsaws that just would have destroyed you. Even like on normal stuff, like, but normal in bounce shorts though, or not bounce shorts, normal in biotech. Like, you'll go in on a gap through resistance. You think this is the highest winning percentage play, and then it ends up turning into something like a short trap. And then one of those short traps you can't even get out of because it's uptick halt and all kinds of stuff. And you're just like, if I went in with like a desperate whatever in my head, I would have blew up there. Like if I went in leverage there, I would have blew up. Okay, if I went in this place, I would have got messed up. Let's see. Nice, you play Monster Hunter. Oh yeah. I really need to get back into it though. After defeating all the dragons, all the modes, pretty much maxing 4 weapons. I forgot if we spent money on any of that. I just know we spent a lot of time. Like, we would do it in the middle of trades. Like, I kind of want to start streaming and gaming at the same time during this time. Or I might do it closer to the end of the day. It really depends. Yeah, because like, I really need the focus during this time. But my experience with gaming and trading in the past was, if I start gaming, I'll literally put whatever was, so it's all about interest, and you don't want to have a conflict of interest with your trading. And it's so easy for me to have a conflict of interest if like I'm hungry, if I'm tired, if I'm all this other stuff, fill in the blank. And if I see a trade that's not something that I'm extremely determined or desperate or any other kind of motivating term to trade, then it's so easy for me to have a conflict of interest. And I'm just like, oh, I'm about to play Diablo, or forget this trade, I'm about to go do this thing. You know, if it's just your everyday like gap up short, or if you're like really low odds trade, yeah, more power to me. But if it's something like I really need the trade and I'm slightly afraid of it, I don't want to get into that mindset where I rationalize or justify some type of reason to run away from the trade. Because like, that was one of my things I would do in the first like 6 months of trading. I would spend like 10 hours studying all this other stuff, get in front of the computer, And I'm just like, you know what? This is the perfect time for me to look at my phone. Okay, now I'm on TikTok, I'm on Instagram, I'm watching anime, like everything in between. So I don't want to go back to those old patterns, but I also don't want to just run away from the whole situation. That's where I'm at right now. But I forgot why I came here. Oh, I think I was going to one of my TikToks. Kinda forgot. Yeah, well, let's see if something popped up. And I don't see it. Do you live with Steven? How do you know he doesn't live with me? Yeah, I do. What do you think about the bank going bust last week? Is there going to be lots of people withdrawing their money from banks today? They were already withdrawing their money like last week because some people were aware of what was going to happen, and that's what led to a really sharp dump like 2 days in a row in SPY. Most of it was happening in like the options market because of the reaction to all the interest rates and stuff like that. And then as soon as they offered the zero risk free options, a lot of people are going to withdraw from what they're doing now to put it into the risk free option that's backed by the government and stuff like that. All the people that were doing crypto, they don't want to get liquidated and end up like Luna Coin and all those other banks that literally disappeared and people lost like all their savings, 99% of their investments and stuff like that. So yeah, people should be, or not should be, they will be taking a lot of their money out before their bank pretty much goes up in flames. My thing is, I don't know all the details and all the stories, so it's hard for me to give insight into that yet. But yeah, overall, everyone, they're gonna dodge, like get out of Dodge. Yeah, man, I hear you. I think PDT rule doesn't help with it either. See, that's the main thing. Like if I was above PDT, I know I could go in and out, like I could breathe. But now under PDT, I'm just like, okay, I actually have to focus. Like focus as in like sacrifice everything except the thing that makes me money. And I pretty much can't afford to do anything else if I don't do that. Yeah, but yeah, it doesn't help. You're right. Wild Hearts for PS5. Good. All right, so it's 15 minutes until the close, and SPY went up $2. That's something. But it doesn't look like we have anything to trade right now. Oh, that's why.
Me? Obsessed with you? Yes. Me?
I'm ugly. Stop that. I really want to just start spamming TikToks. Like, just because I found the CapCut and it has all the templates. And that's gonna be fun. We'll do like 50 of them and choose the top 10. I'll make a YouTube version. My only concern is like when I do my creative stuff, I always come off as creepy. So I have to work on that. You know, I'll give something to Steve and he'll be like, "Get away from me, you creeper." Look, my pride crushed. Okay. Unfortunately, you have used TradeZero, not international one. Yeah, I have entertained the thought of getting an international account in a few ways, just because of the PDT rule. But I decided to do it. I decided to follow the rules of the game like everyone else. And I think it builds character. Now, the character that it's building right now is angry, but that doesn't do me any good. So I'm trying. Yeah, that's the thing. I'm trying. Now, having ChatGPT, that one makes me really excited to accept the challenge, because now, other than, you know, people in the chat and, you know, bothering Steven and stuff like that, I pretty much have someone to talk to back and forth, and like we cuss and discuss about it. Like, I'll show you what I was doing like about an hour ago. Where'd it go? Oh, there you are. Yeah, I was just pretty much going over the basics, like equation, like basic position sizing and risk management equations. And it's good to have someone to talk about the general things with. Like when I talk with a beginner, like, and they ask me questions that you probably see inside of the, where are you at? There you go. Oh yeah, bro. So if you go down to the public rooms, which I don't know why I can't. Oh, there we go. There's a question lounge down here. And down here, you know, people have questions, obviously. And some of those questions have like the very basic knowledge. And one of the concerns when I first started, you know, asking questions to Steven was he would tell me about when you're a trader, you identify as a trader. Like you're trying to find efficiency in an inefficient market, and you want to be fast about it. Well, when you do that, you have to define stuff that isn't defined already, or you have to go find, like, you don't have to reinvent the wheel, but you need to reinvent a wheel that's personally tailored for you. And like in this really crappy metaphor, that's supposed to be your trading system. And each part of that trading system, you have to define it like for yourself and stuff like that. And at the time, you know, Steven wouldn't just give me equations directly. He would just give me like a whole bunch of like paragraphs and stories of like how I can conceptualize everything. And so I would always comprehend like 20% of that and think I had got 100% of it. And so I would run with that 20%. I would make a little bit of progress, like very fast progress, but then I wouldn't know how to keep anything that I made. And then I would try to fill in the blank with my own like stuff I would gather from other people. Well, that naive version of me didn't realize that most people were full of shit. So I just ended up with all this stuff that was kind of useless. And so I had to go back to the basics. And then every time I would talk to Steven, you know, his level is up here and like he's already refined the efficiency down to a T. When I would talk to him, I can literally see myself changing the way he's thinking. And it would affect his trading. And so I just stopped asking him for like advice and stuff. I would just try to listen to when he gives other people advice, or like if I did ask him for something, it'd be something that like he just got done sharing. I wouldn't ask for anything new because I can feel how I would make him a worse trader by being a bad trader next to him. And you know, you throw that on like a scale of like how many people he tries to like teach and stuff. It really like made my it made me understand a little bit of like how teachers normally feel, like how they have to understand, like how do you say it, like, you know how they say teachers and how they learn just as much from the students as much as the students learn from them. Well, in my case, I always feel bad to go ask people for anything, but when I'm talking to the AI, I'm just like, oh, it's over. Like me and this thing is talking for hours, and I'm just trying to get down to the T of like, what do I actually know? And is this something that I can confirm as like not something I either made up or that I misinterpreted wrong? And it's real fun because like I keep narrowing everything down to an equation, because like I have so much knowledge, but it's not all my experience. And so like I've gone through like all kinds of traders from like England versus like traders from like all these other places. And it keeps going into this kind of stuff. Unfortunately, you have I already saw that. Still nothing popping up yet. I'm sad. No, I'm not. But what was I doing? Oh yeah, I was giving an example. So if I go to my notes, like this page of notes is over 70 pages long. I've already had, so up here, there's like a grading system for me. I changed this to about 42 iterations. And every time I would just change the color on this. And I never went past B. Like I never gave it anything above a B. Because like every iteration had a color, and long story short, it makes it much easier to condense a lot of these notes, because originally they were just bullet points, just straight bullet points I got from the Freedom Challenge, or straight bullet points I heard from Steven. And then I learned how to like condense whatever I learned into something simpler later. Well, now this year / kind of the first year more than the second year, I'm trying to get everything down to an equation, especially for sizing techniques. So there we go. Especially for these. And like, this is what I was doing this morning, just looking at the normal stuff that you see in trading techniques and you see in like all the DVDs and stuff like that. Like this is stuff I already know, but I just never was able to internalize it until I could, you know, talk about it like for a long time and then give examples with like very small numbers, like 10, but risking like 1 unit and things like that, out of a equity of like 100 units. Like I don't know, it makes no sense, but it makes sense. Like, what do you call it? All the traders from England I would follow, they would explain it so much better. Go. I have a second YouTube, but I think I follow at least one on this one. John. don't even know where I see followers on this. Literally don't. Where do I go to members? Okay, here we go. Trading respect. Okay, obviously this is a lot of Steven, but trading chest. There we go. I like this guy.
When we give our voluntary
Duomo initiative. When they start talking about pips and units and basis points and stuff like that, I'm trying to get my risk management systems and strategies down to those basic risk per share and percentage share. There we go. Yeah, like, so I know all these, but I just say them in like a very Chinglish way from like Steven's side. But I kind of want to say them in a different way so I can, you know, show you guys. Yeah, but that's what I'm working on for now. Dude, I'm just like so. Okay. When did I sleep? Yeah, we go. I think I know why I started that conversation. Or not even really a conversation. It was more of a rant. But what's his name? At the last conference, there was one guy. He put his risk management system up there. And normally I'd have some idea of risk management systems that people would do. And when he put his up there, it just looked like he was angry at the chart. And it was just a lot of going in and out. And I just didn't understand the system. And so I was trying to explore more, like less systematic systems, but more of systematic systems that have been tailored to personal risk tolerance. And I was having trouble defining risk tolerance based off of percentage of your like account. Because, you know, Steven would originally tell me before, never put in above like 40% of your entire account. Like, and even before you get to that point, you actually want to stop at like 20%. And I'm like, oh, okay. And he's like, only once you master that level, then you can start like sizing up. And then, you know, he'd just give me all these like very fixed rules. And he's like, see what you can do within this window. And then you'd build your way up from there. But when I see like the other millionaire traders and trying to guess how their risk management goes, just because I have an idea of like Steven's, it's just really, I don't know, it's fun trying to figure it out. but it's also kind of depressing knowing that like you won't be able to use that until like a while from now. All right, market's open. Like you could use it technically, but it wouldn't be relevant until no, it'll always be relevant. You could use the practice. You just have to put it on your own scale. Oh no. All right, so I'm gonna give this 5 minutes, maybe 10. Just see what pops up. So last week's theme, we left the IPOs and the SPACs, the biotechs and resistant plays. Is there something else? I think that was all the themes from this month so far. So a potential theme for the financial sector. I don't know what that would be. Energy, coal, financial. Buyout, no, AI as well. Oh, AI. Yeah. AI. All right. I'm not going to stare at this like that. There is one thing I wanted to do. I think I talked about it with this the other day. What are all the themes in a secular trend? Okay, while that's thinking, put this up and then I'll ask Evernote themes. I think I literally got 0 results. I saw it the other day. It was on a website that was talking about news. Yeah, I think it was this one. The Street. No, it wasn't, because I remember it being on the left side. Yeah, definitely not. Demographic, economic. Nope, not the changes I'm talking about. Biotech. I know it's theme. No, it's not just day trade. It's secular something. Secular market. For example, EV, AI, biotech. Must be a busy time with because it's slow. What else did we see? Oh, there we go. All right. Our long-term trends that impact the various industries. Yep, that's what I'm looking for. But they only give me 3, and it's typing so slow. E-commerce. Yep, this is the list I'm talking about because e-commerce is one of them. But this might be like a list of like 12 things. So it's gonna take a minute. Anything else pop up over here? Oh, here we go. Your music is giving me Super Mario Pokemon vibes. Yeah, every morning. Every morning. What's his name? This is Harris Heller. When I was first learning about cameras and audio and some stuff like that, I went to his channel, and this was one of those, not royalty free, but one of the musics that doesn't flag the system for like YouTube. So I just put his playlist on every time, and most of it's him just remixing all kinds of stuff he likes. And you could definitely tell he had some Pokemon and some Super Mario, like a little bit of everything. And there's some really good ones in here. I actually haven't found my favorite. Like, I can hear it when it comes up, but it's usually like the same. No, I don't think it's actually the same 10. Like, I know he's changed this at least like 2-3 times. Like, you see, I only have 3 of them downloaded. Look at all the banks halting down. Oh yeah, that is something we could do. I kind of wanted to know what was going to happen to my bank, just because I hear nothing good ever happened to it. I'm talking about Chase. So how do I want to do this? Yeah, put it here. All right. Sit it down. FinBiz here. Go to. I think I can go to groups. No, it's maps. That's what it is. Financial sector. I don't know if we just want to look at the ETF for the overall financial sector or the ones that are just tanking right now. It looks like FinViz isn't even on yet, which is kind of weird. But let's look at Wells Fargo. Give me. Bank of America. Okay, that's popular. Yeah, that one stays. Citadel. I think I know a person with that. Throw one more. What is that? Charles Schwab. Charles Schwab. I think I heard about this one. Is he suing JP Morgan or something? I just remember the person that was talking about him had a really hard time saying his name. I want to get Chase. Here. Hey, take your sim. JPM. Look at that. 7%, 2%, 19%. Yeah, this is definitely the one that was getting messed up. Which one's C? Yeah, this one's not impressive. We putting JP Morgan up here. Okay, 3% doesn't sound that bad either. You know, until we realize that they're talking a lot of money. All right, guys. I don't see anything popping up that I would touch in the penny land. These banks, they're just dumping. Kind of looking at that one from Canada, slowly growing. Yeah, but it's already 15 minutes in and only 3 million. It had about like a 10% increase. And since it was a downtrending chart with very little volume, with no individual resistance, yeah, even if it did pop, the last news was back in February 20th. Hold on, that's actually not that far away. Yeah, but nothing ideal. So I think I'm gonna head out. I I wonder if anybody's trying to buy the bounce on any of these. Because I remember there was one day that everything just dropped 6%. So if this is anything like SPY, I wonder if there's like a maximum drawdown and then like a bounce. But I'm not going to touch it. But all right, guys. Let's see what you're saying. WAL halted negative 75%. You're lying. Let me see. Oh, damn, this. Wow. So, what was the one that went from $800 to $30? SVVB? That's not it. Silicon Valley Bank. No. I know it's SIVB. Oh, yep. I think that's it. Might be it. It doesn't look like $30, right? Oh, no, it's $30. It's crazy. That's just crazy. Yeah, I'm gonna go do my own research on how is this gonna affect like penny stocks. Because overall, if we try to treat it like GME and all those other meme stocks, and we're just talking about money going in and out of the market in terms of like liquidity and how's that going to affect the dollar block and everything like that, people are going to be broke, so nothing's going to come off the ground. And with the next parabolic, instead of seeing like 400 500 million volume, we might be seeing like 150 and reset back to 2017 kind of levels, like permanently, not stuck between the like flux between like 2021 volume and like 2019 volume. So I'm like, this is in it also, is this just the beginning? Oh no, we're probably going to see what Ben was talking about. Oh, you did know the ticker. SIVB. My back hurts. All right, guys. I'm gonna head out. You guys be safe. Yeah, I'll see you guys tomorrow. Like, there you are. Peace.